Welcome back to the deep dive.
Yeah.
Okay, get this. Small and medium-sized enterprises, SMEs,
Mm-hmm.
they make up something like 90% of all businesses around the world.
90%. It's huge.
And they contribute up to 50% of global GDP. Just think about that scale. They're kind of these unsung giants.
They really are. The backbone, you could say.
So what we want to do today is take a deep dive into how stock exchanges are becoming, well, really key players in helping these businesses.
Helping them embrace sustainability, right? Not just survive, but actually thrive with it.
Exactly. We've been digging into this action plan from the UN Sustainable Stock Exchanges Initiative and the IFC.
Yeah, and there's some interesting forewords, too, from places like the M Stock Exchange, the
Right.
Philippines, the IFC itself.
Right. So our mission here is to pull out the key insights for you and show how sustainability isn't just optional anymore for SMEs. It's strategic. It has to be.
Absolutely. We're looking at how financial institutions like these stock exchanges are stepping up.
And why that support matters so much. Not just for the SMEs, but like for global economic stability and sustainable development overall.
It's about empowering a massive part of the market, really.
Because when you stop and think, SMEs really are the bedrock, aren't they?
Totally. They drive innovation, create jobs. I mean, what is it? Up to 2/3 of global private sector employment?
That's the figure, 2/3. They're your local shops, the startups, the family businesses keeping communities going.
And because they're so fundamental, their move towards sustainability is incredibly important. It's shifted.
Shifted how?
Well, it's not just about ethics anymore. It's strategy. Investors, regulators, even customers are focusing much more on ESG, environmental, social governance stuff.
Right, ESG is everywhere now.
So businesses, big or small, they're realizing, okay, we need to get on board with this for the long haul.
Okay, but let's be real. While the opportunity sounds great, SMEs face some pretty big hurdles, don't they?
Oh, definitely. Limited cash, limited people.
Yeah, trying to figure out complex new rules.
And just keeping up with how fast the market changes. It's a lot to juggle.
It is.
But, what really comes through in the material we looked at is this core idea. Sustainability isn't just another burden. It's actually a massive opportunity for them.
An opportunity how? Like, what are the benefits?
Well, think about it. Being more sustainable can make them more competitive. It builds resilience, makes them tougher when shocks hit.
Okay.
And it can open up completely new markets, new partners. You get better efficiency, maybe lower costs from using resources smarter.
A better brand reputation, too, I imagine.
For sure. Attracting customers who care about this stuff. And it makes them more attractive to investors looking for sustainable businesses. It's about future-proofing.
Okay, now this next bit I found really interesting. Historically, the big sustainability rules, the mandates, they were mostly aimed at the huge corporations, right?
Yeah, that was a focus.
But now there seems to be this shift, this kind of spillover effect, they called it.
Right. What's happening is the big companies are starting to ask their suppliers, many of whom are SMEs, for emissions data, specifically Scope 3 emissions.
Scope 3. Remind us what those are again.
So Scope 3 covers all the indirect emissions up and down a company's value chain. It's not their direct factory emissions, but like emissions from their suppliers or from customers using their products.
Ah, okay. The tricky stuff to track.
Exactly, especially for smaller firms. And the pressure comes because if an SME can't provide that data to the big corporate buyer, well, they might face penalties, or worse, lose the contract altogether.
Wow. So sustainability suddenly becomes part of just doing business, part of the supply chain relationship.
Precisely, it's woven right in.
And if we look at what makes SMEs unique, you can see why they could be such powerful agents for change. First off, they're so close to their communities.
That's a huge point. They're embedded, they hire locally, buy locally, they're part of the fabric. So when they become more sustainable, the impact is very visible, very local.
Tangible. And they're also this force for bringing more people into the economy, right? Like women, young people, minorities.
Absolutely. The sources pointed out globally, maybe a third of businesses are owned by women. And the IFC reckons over 30% of SMEs struggling to get finance are women-owned.
So supporting sustainable SMEs helps tackle those gaps too. It's social as well as environmental.
Definitely. And don't forget their agility. SMEs can often move faster than big companies. They can innovate, find niche markets for green products or services. That's vital.
Okay, so they're nimble. But what about their environmental footprint? Isn't each one quite small?
Individually, yes, maybe small. But collectively, it's massive. They generate something like 40% of the business sector's greenhouse gas emissions.
40%. Wow. Okay, so you absolutely need them on board for things like net zero targets.
You simply can't get there without them. Their collective action is crucial.
So they're innovative, community-focused job creators, still the drivers of economic development.
Fundamentally, yes. Growth, jobs, innovation, balancing things out regionally.
So, boiling it down, what are the real carrots? The direct incentives for an SME to integrate sustainability.
Okay, first, meeting market demand. Customers increasingly want sustainable options. Simple as that.
Okay, market pressure. What else?
Meeting regulations, whether it's direct rules hitting them or that indirect pressure from their big customers we talked about.
All right, the compliance angle.
Then there's access to money, getting finance and investment. Being sustainable makes you more attractive to certain investors, maybe gets you better loan terms.
Lower borrowing costs, perhaps. That makes sense.
It also helps manage risk, makes them more resilient to climate change impacts, resource shortages, economic wobbles.
Builds robustness.
And it gives them a competitive edge. It can spark innovation, new eco-friendly products, new ways of doing things.
And finally, people, right? Attracting and keeping good employees.
Huge one, especially younger generations. People want to work for companies whose values align with theirs, companies that care about more than just profit.
Okay, so the why is pretty clear. How do the stock exchanges actually do this? The action plan mentioned a framework. Engage, enable, empower.
That's the one. 3 levels of action.
Yeah.
And running through all of them is capacity building, basically, helping SMEs get the knowledge and skills they need.
Got it. Let's start with engage. What does that look like?
Engaging is about building networks, making connections. Exchanges can link SMEs with each other, with industry groups, chambers of commerce, places they can share knowledge.
Sharing best practices.
Exactly. And they can also raise awareness among the big listed companies about the challenges SMEs face with sustainability, helping them understand how supporting their suppliers helps their own green goals.
Makes sense. It's interconnected.
Exchanges can also provide platforms, websites, events, whatever, where SMEs can find info on trends, tools, guidance, networks for peer learning.
Learning from each other.
And they talk to policymakers, too, about new rules affecting SMEs and encourage investors to actually talk with SMEs about sustainability.
Is there an example of this engaged level in action?
Yeah, the ICC Small Business Champions Network was mentioned. It specifically helps SMEs involved in international trade, tackles finance gaps, pushes digital tech, promotes sustainable models. It's quite holistic.
Okay, so that's engage. Next is enable, providing the tool.
Pretty much. This is where exchanges offer practical help. They might provide written guides tailored for SMEs. The SSE has a model guide, for example. They run workshops, webinars, training sessions.
Hands-on stuff to help them understand and actually do sustainability.
Right. And they can showcase successes, hold events highlighting local SMEs that have done a great job integrating sustainability. That provides real-world inspiration.
Proof that it can be done.
Another enabling action is building that ecosystem, partnering with industry associations, regulators, sustainability experts. Some even set up innovation labs or incubators just for green SMEs.
Nurturing new ideas.
Yeah, and recognition is key here too. Exchanges can have awards or special labels for SMEs that excel in sustainability.
Like the London Stock Exchange's Green Economy mark.
Exactly. It identifies companies getting a big chunk of their revenue, 50% or more, from green activities based on a clear classification system. It's a clear signal to investors and the market.
Sends a message. What about data? That seemed like a big hurdle.
Crucial point under enable. Exchanges are pushing for the development and use of free or low-cost digital tools. Tools for carbon footprinting, tracking other metrics, because getting good data is really tough for SMEs.
Making it easier to measure progress. Are there other examples of enable?
Sure. Bursa Malaysia, the Malaysian Stock Exchange, has a program with guidebooks, including one specifically on sustainable and ethical practices.
Okay.
The Johannesburg Stock Exchange runs an annual sustainability showcase, good for sparking discussion on ESG.
Right.
Prague Stock Exchange has its start market for innovative SMEs, lower costs, special start days to meet investors.
Tailored for smaller companies.
And even if not SME specific, like the Vienna Stock Exchange's Vin Ike Sustainability Awards, it shows the power of recognition. That principle can definitely be applied to SMEs.
Okay, makes sense. So we've had engage, enable, Finally, empower.
Yeah.
What does that involve?
Empower is really about directly facilitating opportunities, especially tackling that huge barrier to access to finance.
Ah, the money. Always crucial for SMEs.
Absolutely. So exchanges can offer capital raising opportunities, often through dedicated SME listing boards.
Why a dedicated board? What's the benefit?
Well, it brings focus. The listing requirements can be tailored, made more proportionate for an SME's size. This makes meeting sustainability disclosure rules more achievable.
Less burdensome.
Right. It also helps build a community of similar sustainable SMEs. They can network, learn from each other. It helps grow a whole sustainable market ecosystem.
Are there exchanges doing this? Dedicated SME platforms?
Yep. The Botswana Stock Exchange has a specific SME fund. The Egyptian Exchange has the Tamayus Index for high-growth SMEs.
So specific financial products.
Exchanges can also build sustainability right into the listing rules for these SME boards, but again,
yeah.
keeping it proportionate, or provide specific guidance if SMEs are on the main board.
And they can create incentives, too.
Yeah, maybe reduced listing fees for sustainable SMEs, or giving them more visibility. And this is where regulatory sandboxes come in sometimes.
Sandboxes. Explain that again quickly.
It's basically a safe, controlled space where businesses can test out new innovative ideas like new ESG data tools or disclosure methods with the regulator watching closely, maybe under slightly relaxed rules initially.
Allows for experimentation.
Exactly. The UK's Financial Conduct Authority, the FCA, has expanded its sandbox to include ESG data and disclosure products, helping get those innovations to market.
Interesting. And beyond just listing, do exchanges offer other support under Empower?
They can. Broader business development or advisory services, things like market research, help with compliance, or specific sustainability support like self-assessment tools, benchmarking against peers, maybe even help crafting a decarbonization plan.
Real practical help. Examples of that.
Loads. The Philippine Stock Exchange has its LEAP program and SME board. They offer personalized guidance, connect firms with IPO advisors, have lower financial hurdles.
Sounds very hands-on.
The London Stock Exchange's AIM market, alternative investment market, is famous for being flexible, less heavily regulated. But a key part is the Nomads-nominated advisors who guide the SMEs.
Like mentors through the process.
Kind of. Then you've got Bursa Malaysia again, with their centralized sustainability intelligence platform. It uses automated tools for climate reporting, connects companies, including SMEs, to financial incentive programs.
Using tech to make it easier.
TEAS, the International Stock Exchange, has a private markets platform where private UK companies can trade shares directly with investors, cutting out intermediaries.
Streamlining things.
And Argentina has a specialized SME exchange called MAV, focuses on debt instruments, but also has an alternative stock market just for startups.
Wow. So a lot of different approaches, a lot of innovation from the exchanges themselves.
Definitely. They're clearly seeing the need and trying various ways to meet it.
So let's wrap this up. What's the big picture takeaway for you, the listener?
Well, I think it's pretty clear. Stock exchanges are stepping up, becoming really important players in helping SMEs get on the sustainability path.
And that's not just good for the SMEs, right? It fosters a more resilient, more sustainable global economy for all of us.
Exactly. They do it through those three levels: engage, enable, empower.
And the benefits ripple outwards. SMEs get better access to capital, new opportunities.
And the exchanges benefit too. They broaden their offerings, strengthen the market's overall positive impact, and align themselves with where the world is heading on sustainability. It's a win-win, potentially.
Okay, so as we finish this deep dive, here's something to chew on. We've seen how the collective action of millions of SMEs, when nudged and supported, can make a real difference to huge global challenges. So consider this. What if that same principle of collective intentional action was applied more broadly? What untapped potential lies within your own daily actions, your own choices, if scaled across your community or your workplace or your industry to drive similar transformative change? Something to think about.